Everybody, welcome back to Trading Futures. My name is Mike Fairborn, sitting in for Ben Watson today, who's out on the road. I believe he'd be down in Sarasota, Florida, at a branch workshop. But great to be back again. Looking forward to a discussion, folks. Today we had an early rise in the markets. We were able to get a trade under our belt. We'll take a look at that. I want to look at some pivots today, some pivot points, as well as some Fibonacci trades. Did see a general recovery in the market, and that's just basically, I couldn't really find any news related to it. We'll definitely take a look at it, but it was just basically a response to yesterday's bigger sell-off. So is the news I'm getting. Hey, today we're joined in the chat by a good friend of mine and manager, Scott Thompson. Great to have Scott on board. It's a privilege to have him on. Used to teach a number of our classes here and is very, very knowledgeable on this topic. And welcome to each of you. Good to have you here. Good group. All right, well, let's do this. I want to jump right into our disclosures to get going here. Plenty to look at. All right, first off, futures and futures options trading does involve substantial risk. It's not suitable for all investors. Futures accounts are not protected by the SIPC, the Securities Investor Protection Corporation. Some additional notes on futures, as you can see listed here as well. Okay, next slide. Wanted to state that stock, ETF, and index options are not suitable for all investors, as there are for all investors, as the special risks inherent to options trading may expose investors to potentially rapid and substantial losses. Now, a quick note here too: virtual currency derivatives trading involves unique and significant risks. There's some more information listed there. There's actually a website to look at as well. All right, you should be careful. You should carefully consider whether trading in virtual currency derivatives is appropriate for you in light of your experience, objectives, financial resources, or other relevant circumstances. Now, the information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. We will be using the Paper Money software application, which is for educational purposes only as well. Final note here, investing involves risk, including for some products more than your initial investment. Actually, stop orders are not guaranteed in execution due to exchange-based rules on certain conditions at the time of activation. The exchange may reject or substitute an exchange-designated limit order for the originally triggered market order. All right, so just a few disclosures there to get us going, but let's get started. Taking a good quick look at the markets initially here. In fact, what I'll do, I do have the metals overview up initially. I wanted to just pull up first the futures index overview. We'll go full screen on it to give us kind of a general feel of where the markets are at right now, speaking relative to the pivot point line, which is always really useful. Lets us understand, are we bullish or bearish on the day, generally speaking, and oftentimes that means that there is a trend if we are above it, a trend up, or a trend below. Again, this pivot point is what I'm looking at right here. And again, you can add this. I've got a quadrant of 4 over here, but we can add that in any one of these here. I will share this too with you. In fact, let's just do that real quick so you've got it in case you want to use this. All right, the futures index overview. Boom. I'll put that right into the chat. It is not a script, a think script, so it's just a grid of the 4 key indices: ES and the NASDAQ, S&P 500, NASDAQ. You got the Dow, and then you've got the Russell in the bottom right. And a lot of times they're all going in the same direction, but not every time. And what we're doing is just spotting strength or weakness out there. You can see right from our vantage point here that really the strongest is the Russell thus far. It probably had the biggest sell-off yesterday. Oftentimes it does, and sometimes it recovers the strongest too. It is the one that's breaking its prior high. Just looking at these 5-minute bars here over the last one day. So that looks to be the strongest. The other 3 seem to be pretty much in line here. Okay, and again, I couldn't really find any news today to support this bounce, aside from the fact that it's just a Monday. It's a recovery from Monday's decline. Was the only news I was saying. Of course, being mindful of earnings that could throw the dynamics one way or the other. And we'll start to see those actually pre-market now, as well as maybe over the next half hour, maybe some of the results of those impacting the markets. Okay, well, looking at the ES right here, you can see we are a little bit higher. I wanted to move over into the pivot points on each of these. And I'll just pull this over here so we can take a look at it right now. I did send out an X post for the pivot points so you get the calculations. It's just simply a calculation based on the prior day's moves. It's and you can see over here, the key pivot point is basically just the high plus the low and the close, I believe, divided by 3. And you got that as the main pivot point for the prior day's move. You can see we've been up over this time frame, and the pivot point trade, we discussed a little bit more about this last week. We can trade to the upside if we are above the center pivot. We can trade to the downside if we are below. In other words, a bounce off the center pivot point to the upside would be a play to the upside. And then what we would basically do is we would take a target, potential target up here. So let's say, for example, we +1 here just above the center pivot point, and then -1 just 2 ticks below the R1 level. That's the R1. We got the R2 up top. Okay, so generally speaking, that is a bullish trade. When we trade like this, particularly when we're looking at the R1 to the R2, because this could be also another potential trade, +1 here, -1 up here at the R2 level. One of the nice things you're getting here is the underlying trend, higher highs and higher lows right here. Okay, and so the trend is in our favor. Also, conversely, if we were trading to the downside, we would get the downward trend. Now, I also have within here, as a quick note, and then we'll look at the other markets, but that is the volume weighted average price, the VWAP line, which looks at volume combined with prices. And if it's rising or if we are above this line, a lot of traders that are looking at a shorter term trade will not trade this unless we are above that line. They are bullish if prices are above that line. Generally speaking, we will get prices above that line once we start to get above the center pivot point, but a lot of times we don't. And when you don't, it's an indication the trend is not there. And also the trend is not there as it relates to volume. So you're not getting the volume kind of combined. In other words, you're getting buying pressure on the upticks and selling pressure on the downticks. How is that adding up? Well, as long as prices are above that, we're rising above the volume weighted average price. Okay. So that is a general look. Again, quick note, I better note this because we're far, far away from a downward move. Well, right now we are, but this is where some traders might look to take the trade to the downside. Oops, just do that again. So that's a -1 +1 down here. They're basically looking for a downward move at the support levels. And this is a support 1 and a support 2. Just the flip side of what we just looked at on the upward move. This is to the downside, but these are just in place to help us find what are oftentimes interesting levels of support or resistance. Okay, we don't need these to trade. In fact, a lot of times there are just price patterns that fit within here, but they can be helpful for particularly short-term trades over a 5-minute chart. Okay, let's go ahead and take a look at the NQ. It's going to be very, very similar. We saw what that center pivot point looked like, but you can see what I'm saying. You'll notice that some of these are a little bit different. Like, for example, from the pivot point to the R1, that's a shorter distance. And so it wouldn't be as difficult to really hit. I would say same with the Dow. It's fairly close to that top point as a trade. And here is your RTY that's already hit it. So generally this trading system, we're looking at it maybe potentially slightly pre-market to open the open of the market to put this kind of a trade on. This break above that center pivot point happened very, very, you could say late last night, right? It happened after hours. We began to just trend higher. One of the issues with this and why we don't look at it we don't look to take a trade that early or that late is because the volumes are really quite low, and you can get big moves back and forth, and that was basically a risky trade. But anyways, it did have an area where we went up here and we went down here. Okay, we just hit a trade. Okay, so I'm going to show you what our trade was today as well. So quick note, Well, let's just go into that real quick. We look at the metals market in just a second. But the trade we looked at today was simply on, I'm going to go ahead and maximize the screen because we did get a trade earlier today. Let's go ahead and maximize that sell right here. A trade above the center pivot point. Now, here is a quick little note. If you don't get the initial trade off of the pivot point, which we really wouldn't have got because, we were all sleeping, basically. I mean, this was very, very early in the morning that we initially got the bounce here. What we could look at, which I did do here, is on the MES, right? The MES over here. Let's go ahead and click on that. That was the Fibonacci bounce can be a trade that fits inside of those pivot points, particularly if those pivot points are really quite large. That's what we had here today. I drew off the bottom here. As long as we are, and this is, by the way, the Fibonacci bounce, as long as we are above the center pivot point, we can look to take trades that are bullish, and we were. Okay, so we're above the level here, above the purple line. This is the main pivot point right here. We're above that level. Notice you're getting a little bit of an image here, folks. What is that price pattern? We know the trend's in place. We can see with what we've got right here. The trend is there. But then we also have the possibility of a flag type pattern. How this works is we take the Fibonacci's, and this is, we find those are in the bottom right-hand corner of the screen, the drawing tools. Fibonacci are your percentages. Clicked on the percent. You click one time, and then you can click again to see those fibs. In fact, let me just point over here. Drew it off of I use normally the highest number of touch points. We had a number of touch points off the bottom. We had a couple of key body candle points up here. So I've drawn it to that level. And I did see when I drew that Fibonacci, folks, there were a lot of, what you want to look for too is potential anchoring. Notice this pullback initially went right to the 50% level. It did not go below it. Then we went up to the 23.6 level, and we really did kind of a sort of a pinball back and forth between those two Fibonacci points. And then we dipped right to the 50, bounced, and then to the 61.8. Okay, now the trade here is when you get above, here is your scenario, your setup, your pullback. If you get below 50, okay, and you start to move right back up above it, that is the potential for an entry point right here. So I'm just going to say we could add a position in here. Now, what I did is I added in actually 3. I'm going to explain this here in just a second, but that was the initial purchase. So if you move up, you're above the center pivot point, right? That's the first condition. We're trending up. You go below the 50 and you start to go back up. Now, this was way early in the morning, right? So I did not get that trade. We bounced off the 61.8. But as soon as we break up above the 50% level, we could take the trade. The whole idea here is if you bounce up above the 50, then you're looking to at least take the trade up to, we're looking at a flag pattern here. Those of you that have been in the swing trade class, you know this. That is the T1 level, the target 1. The target 1 level, which we did hit right here. And that's what that fill order was. Okay, so we sold actually 2 there, although I bought 3. I'm going to explain that to you in just a second, how some traders will trade this method. All right, and then we're still climbing, but that's okay. We got what we were after here. We hit our T1. All right, so between this bounce, though, okay, so as we came up here, one of the things I did do is I waited for a couple of closes above the level. We got that right there. The reason why I waited for 2 closes above the 50% is because we failed above the 50% one time already. Here was the 50% right there. We went up, and we would have stopped out, not with a close below the 61.8, but just a trade below the 61.8. If we're okay, so we ended up bouncing off that level, though, and I caught it a little bit later in the game, prepping for this class. But you can see right here, we had a couple of closes. It was actually kind of looking like a head shoulder right there. And then we took this trade up. Now, I added in the MES. Now, the MES is a quick note, just as a really fast. You can see that it's a tenth the value of the ES. It enables us to do some money management because you can buy, let's say, three. It's the third the size, really, of a, or 3/10 the size of the ES itself. As you can see over here, one tick is 125. We talked about this quite a bit last week, but I just want to let you know I use that so we could have a little bit more leeway on this trade. Now, in terms of potential money management and ways to get in and out, I added 3 in here. Okay, so that's just still really close to a third the size of the ES. So in terms of the movement within the ticks, right? It's quite a bit smaller. Now, this run up here, I did take 1 off the table because this is part of the Fibonacci trading system. Some traders will only take it to the 23.6, or roughly. It's not exactly as you can see, but it's roughly the distance between, the halfway distance between where we're at right now, at the 50% level, and the 0 line, our target, our T1 target up top here. It is the midpoint. It's not exactly the midpoint. We're using a Fibonacci to help us with that, but it's like the 50% level of this point. So what I did in this case is I took the trade up here. I took 1 off the table, and so basically we still had 2. We were +2 here, and then at our target at the top right here, I was a -2. We're still riding through that very, very sharply right now. As you can see, we're still climbing. That's a 1, 2, 3 soldier up. We'll see what happens here. But I'm going to draw this out in yellow so you can see this here. This was our entry point here of 3. We took 1 off at the midpoint because we wanted to try to get profitable on this trade. We still had 2 remaining, and then we took our 2 off at the top. With the trend as part of a flag type pattern, which is above the pivot point. Just going to review a few things. The pivot point, it was outside of our key pivot point trade, right? Because we missed the bounce off of this level, but we could still take this trade. All right. Now, the one thing I'm not explaining is one of the methods that can be used when we do take this 1 contract off up top here. When we take the 1 contract off, okay, what I did in this case is I set the rest at a break even. So all I did was raise the existing stop order just above to the entry point. So I'm going to clear this off right now and just kind of highlight that point. This is the form of the sort of a trading method. So when I sold our 1 contract here, I had 2 remaining, right? But I raised the stop level or the potential exit point just right to this level here, the entry point. Well, actually, I'm sorry, it was a little bit higher. I waited for a couple of ticks. It was just below the 38.2. So I actually raised it to right there. Okay. So what does that do? It helps to ensure that we're at least profitable on the trade. In other words, you see all this resistance up here at the 23.6? There was a lot. We bounced, we didn't hold. When we hit this point, we could have come all the way back down again. It could have failed. But we would have still, had we gotten an exit near our initial entry point, we would have gone -2 right there. What are we out? We're not out anything. In fact, what we did is we gained at least 1 contract between here and here. Between basically our entry point and the 23.6. Does that make sense? Because that is sort of a method that can be used, especially if you are finding, potential for resistance at a 23.6. The trend went up. It was strong. It ended up breaking higher, but yeah. So that's just kind of the method we did this morning on the MES, a 3 contract trade. All of them were profitable. The first one was not as profitable as the second 2. There was a -1 there and a -2 right there, with the entry point being roughly right there, +3. Okay. But I like this method. It's kind of cool too, because like I said, if you miss the pivot, it's a cool way to kind of set up a sort of a flag bounce. Yeah, like just doing generally even like stocks themselves on the bull flag. Because if you can come down here, normally you like to see the bull flag hold at 50% anyways. So let's just say we're looking at a daily chart here. Here's our 50% level. Prices come down. When do you get into a bull flag? Well, one interesting way to get into a bull flag trade is a break back up above that 50. It's a Fibonacci potential bounce where you're hitting a key support level, but then you're retaking it if you dip below it. And so that could be an interesting place to get in, just generally speaking on trades in general. I mean, if it was an approach you wanted to use, we're just using this on an intraday chart. Okay. All right, that was a lot of information, but a lot to explain. I'm just going to take a look and see what else we've got here. Yeah, some prayers for the uptrend. Exactly. All right. Yeah, so there's your three soldier up too. A lot of times that's a candlestick pattern. A lot of times when you get the 1, 2, 3, in fact, you got one over here, three large candles that have kind of broken out of a range. You got one here, here, and here as well. You pulled back. We'll see if we get a pullback here too. 2, 3. But regardless, we did get our T1 target. All right. Yeah. Yes, and by the way, exactly. Just a little note in chat. Here's the pullback here. Look at this. There could be a prior high right there that we could rest on and possibly bounce, a kind of staircase higher. Did we see that over here? I think it's a great catch in the chat. Look right here. Yeah, it was around the 61.8. So let's do this. On our ES, we're still on the MES. Actually, I'm going to remove this drawing. And I'm going to take this off of the closing of the candles here, our 50% fib. I'm going to click one time, pull it up so then we could see how these fibs line up if there is another trade we're going to get. Now, we're a little ways away, right? What do we have to see on the Fibonacci bounce trade specifically? A pullback below the 50, but not a close below the 61.8. Below the 50 and a break, we can test below the 61.8. We just can't close below it to keep this trade in check. And so we've got to move quite a ways down, but what does this look like at the 50% level? Do you see this Fibonacci now anchoring for the next potential trade that could happen later in the day as we are trading the long-term trend? Let's draw a line at the 50, see what we've got. In fact, I'm going to do all of them. Well, let's see. The 23.6, very close to some highs here. The 38.2, sort of. But I think where it gets interesting is the 50. Look at that. This is basically the midpoint almost of this move here too. It's close. I mean, I'm sorry. It's kind of the mid-high point of the pullback. And that's exactly where we paused last time too. So that could be a very, very interesting level. Does that too set up for the possibility of another Fibonacci bounce? That is the question. Okay, the 61.8, yeah, right into that range. But those are really kind of the three or four big levels that we're looking at here. Yeah, a lot of action between the 50 and the 61.8. So, all right, let's see about this. Oh, sorry about that. I was going to check one thing here. Oh, dang. Let me pull this down. Sorry about that. I've got to just pull up one little note before we get going. All right. So that is what we've got. Let's take a look at the other markets here too. We'll just kind of zoom through these. Again, using the MES, pull back to the ES and see how they're doing. Very similar. In fact, we'll just go back to our futures overview up top. Once you have this, which you do because I shared it in the chat, you can just simply click on the arrow, that curved arrow, and it will take us back to all of the markets right there. Okay, so we're saying those. Okay, let's go now and take a look and see what we're getting within the futures metals overview. We'll go full screen here as well. With the futures metals overview, you can really see where the strength is, and a lot of times you're going to see a lot of variation here. Looking at gold, gold has been really, really quite strong. Gold, silver not as strong. Copper has not been that strong, but copper is the strongest today, clearly. In fact, we've got silver, which is just kind of right at its center pivot point. Gold, which is coming down, and it may find support here. This is worth investigating. Let's look at a little bit longer term chart on gold because the trend has been so strong with it. And you can see down here, copper, center pivot point, did a beautiful bounce this morning off of the center pivot. And you can see that it clearly, I mean, it probably did hit its pivot point levels there as well. The weak one here is palladium coming down. So if we were looking at the potential for a bearish trade, we could see something like palladium. All right. Let's see what else. All right. I was just going to read a quick note here for you guys, but we'll wait on that. Okay, let's do this. All right, so we've got a couple of different angles we can look at now too. I'm going to just jump back and look at gold here. So here is the daily weekly chart. I'm going to pull up gold. I'm going to talk about gold because gold has been one that has really been so strong as of late in terms of a longer term trend. And there have been a number of different ways to trade this off of the shorter term pivot points. You can see the move on gold here, a really kind of an explosive move. And sometimes what you'll get when the trajectory really changes, and let's just go back to a couple years here, or even a 3-year weekly is fine. Notice over here, we were getting a trend line. We broke above that trend line, but look at the slope of the trend line going higher here. I mean, it just shot up dramatically. A lot of times you'll get that last little bit of a rally, a big move, and it will look like that. I mean, the slope just goes drastically higher. You'll notice over here too, we've got a 1, 2, 3 candle to the upside. So it's a 3 soldier up. A lot of times you will get at least a consolidation here. Doesn't mean you're going to get a full reversal, but we could see a pullback in gold. Let's go back to, I actually had a daily chart set up there, but here is a daily. I'm going to go ahead and take this off. Now you can see that longer term line, that big jump to the upside here. So what some traders might look at is the possibility of the pivot points on gold. I was going to show you what that has been looking like. Let's see, I've only got it actually on a 1 day, but on each of these scenarios going back, let's go back to a 5-day, 5-minute. There we go. So you can see over here the potential for some of the moves from the center pivot point to the R1 level. You can look over time. My point is here, folks, when you have a longer term, strong trend to the upside on the daily chart, it's very likely that you're going to be getting a number of these pivot point setups. And this is just an interesting way to kind of look at potentially doing some paper trades on each of these within those, maybe some of the strongest points that you might be able to anchor support and resistance at to take those intraday moves without having to carry any risk overnight. Now, some traders might they might have positions that they're holding longer term. In this class, we're just looking for those shorter term trades. This is a way to capture those during the day. All right, let's do this. And if nothing else, too, you can always just do the center pivot point too, and just say, hey, are we above that level, the center pivot point, and then just look for the possibility of flag patterns here. This one broke below the 61.8, but you can see over here, if you are above that level, this is a great example here. It kind of was an early morning trade. There's a bit of a flag pattern there. You were above the pivot point. And there are some others in here too that could have been used. So a few different ways to do that. Let's just jump back to gold. I wanted to point this out. One key thing with gold that we had seen with gold and with Bitcoin, I read those disclosures earlier on Bitcoin as well with virtual currencies. But if you could see up top here, here's gold. Here's the big run up. You'll notice that sometimes we'll get buyers in gold. When gold gets really strong, they might sell Bitcoin. There was a really good correlation previously between this, and we might be seeing it again. Notice over here on the Bitcoin futures, as gold is starting to come down, this just might be an interesting one to keep an eye on. We just began to barely break a new high here. Now, it's true, we did make a new low, technically, but it's very similar to like it's kind of like a similar low, although it did dip. I'm going to say it dipped, but we're getting a new high here on Bitcoin. Now, if we broke above this level, which we seem to be doing right now, we did break above it. Well, let's see if we close above it. We could come back down and find a base here. This is on, of course, a daily chart, but it could be an interesting scenario, okay? The possibility of a setup for a rotation into Bitcoin. If that were to be the case, we could take a look at some of the pivot points on Bitcoin as well. Let me just show you what that has been looking like. So actually today, this was actually through yesterday, you can see the run from the center pivot point up to the R1 level. But again, these are calculated based on yesterday's moves. If we were to get that run up, breaking above the highs, because these were highs here, we took out. If there is a longer term pattern that's formed here, we might be able to rotate, like I said, just from into Bitcoin. But just keep in mind, if that does unfold, and we would see it on the daily chart, it does present a way for us to potentially use these pivot points or the center pivot point to trade a Bitcoin move as well. Now, Bitcoin, though, you want to be mindful of Bitcoin. Bitcoin is not cheap. There are alternatives out there that some traders might look at, but it could be an interesting rotation. Let's just go to it right now. Here are your futures. So a $5 move is $25. That's the tick size, actually, is 5 points. As you can see right there. That's always a great reference. Oh, hang on a second. Yeah, we're on it right there. Okay, very good. All right, so we've got that there. Let's look at some other trades here and see what else we've got setting up. I'm just going to go back to my overview, and I'll use this throughout the day. So this is the one I shared. I like to use the overview throughout the day because, yeah, you'll just get a general idea where the center pivot point is at. You can see the patterns really well. There's not a lot of lines on the chart, so we can be setting up, waiting for the possibility of the next move. I'd say the next one, and the one that really got out of the gates first, was the RTY. Let's take a look at the RTY and see what it's doing. Right click, maximize the sell, and let's see where that 50% might be on the Russell here. Got the fibs up. Couple of touch points there and there, 50%, right at the prior high. So that could be an interesting one to keep an eye on too, right here. Okay, so here is your 50% level, resting right on the prior high. We did bounce off the 38.2. Now, some traders can use also, in some of the stronger markets, they might not wait necessarily for the 50%, although that's what we're using here in our sort of method that we're looking at. But that is your 50%. Some traders can use the 38.2, but the thing I like about putting the Fibonacci's on is it enables you to anchor prior highs, and that's a prior high there. So I'm going to kind of lean towards that 50%, saying, yeah, it's the Russell. It's a little bit more volatile. It's a small cap group. So maybe just wait to see what happens around the 50. Can it hold the 50? Can it retest below it and start to break up above it as well? By the way, as we look at it, the 61.8 was a very interesting point. We broke up above it, and that was really a key test before an explosive move up. Interesting, right? So Fibonacci's within the pivot points is basically what we're talking about today. I just noticed this too. If I take my 50%, could there be other reasons why we could see some key support along here? Well, we got the prior high. We know that. That's a key point. But over here, looks like there was quite a bit there. The beauty of futures is that we do get volume. And that volume profile can be so helpful as we look at this too. Okay, so I want to put on, so we don't have here on our center pivot test, we don't have the VWAP line, but we're going to be taking a look at some volume first. So let's go ahead and just do volume profile, then we'll jump into our VWAP. So you just want to type in volume P right here. It's such a great tool. And if you don't have it, I mean, if you don't have this, it's just so hard to see what you might be getting with the volume profile, which gives us sort of a horizontal view of where the prices have come in at. Now, the only adjustment I make here, folks, is I've gone into the wheel to adjust this. I've just gone to the value area percent. I'm going to change that to a 10. So it's just going to highlight the top 10% of what we've been getting over the past one day. So looking at this, what I'm really focused in on here, and this is really kind of a tight range because a lot of it is overnight or the prior day move, but you see these spikes. There's a spike here. Let's use yellow instead. Okay, see a little bit better. So here is a spike in volume. Here's another spike and another spike there at the 78.6% level. Prices can move on these dips a little bit faster. You might find that because there's just less volume there. And so there's just a little bit less resistance. I point this out because I want to draw your attention right now to prices themselves where we're at. If we start to dip here, we might get down to the 50% very quick. And I'm not sure if we'll get one in the next 5 minutes or not, but we might. And that could be an interesting trade if we do bounce back up above that level, right? Remember, the test is to get below and get back up above. Now, the reason why I bring this up is we're starting to see volume come in between the 50 and the 61.8. We had a couple of key tests in here, but that could give us an additional reason to find some support that comes in at that level. See how you just start to jump up right at that 50, volume comes in, maybe near those prior highs. So we'll see, give it some time, just be patient with it. We've already got one trade under our belt today, but right there, this bounce and possible break is what we're looking for. Volume supports it, but it also said there could be a quick slip there. Okay, between those two. The biggest volume is way down below, but that's kind of outside the range of what we would be participating in today. I'm going to take a look at the ES, our initial trade, and you can see where that was at. So the key volume was right over here, and does it kind of stands to reason, right? Where support might be. We're still going higher on the ES, but right there. Sometimes, not every time, but a lot of times you'll find where there is a key level of support or resistance, you'll also see that it's kind of bolstered by some key levels of volume right there as well. So if we did pull back, just looking at a longer term move, it looks like the ES, let's look at the trade on here as well, just jumping right back to our Fibonacci. Let's see, where would that be? Yeah, 61.8 basically range. If we were to pull back from here, that is. Everybody see that? Okay, notice though, the higher we go, if we were to go up this high, then our 50% level would maybe be near the prior highs here. These are just some great little tools to use as the markets are developing. Okay, the last volume indicator I want to put on here, and we did see it on the pivot points, but that's the volume weighted average price, or the VWAP line. We spoke about it earlier. These are also interesting because is the VWAP line holding above the level when it tests? I'm going to show you this right now. Like I said, a lot of traders won't even consider the trade unless you are above the VWAP line, and they'll also use it as support and resistance. So just to add one additional point in here, here was the VWAP line earlier in the day. Like I said, we were above it when we got our initial trade, but you can see that line can be a support level too, even though it's based a lot on volume right there. So this could easily be used with a Fibonacci bounce as well. A lot of times, if we were to line up the fibs, let's just say that's our 50%, although it's not exactly, prices might come down and bounce off the fib and that VWAP line. It's such a great addition for an intraday chart in a lot of ways. If nothing else, a lot of traders use it as a bounce setup. But now you guys can add to that the Fibonacci's as well as the pivots within there, and any other support and resistance levels to be combined with a couple of different volume indications. In this case, you could see, yeah, lastly, I'll just point this out. We've got the volume profile and the VWAP. VWAP right there, very, very close to the same spot. Could happen. It could be the case that, yeah, we'll see. It won't be probably this setup, but you might find a number of scenarios where you're pulling back to the 50%, and you may have just more indications for a bounce that are already tied into a longer term trend. So it's trading with the trend, but using some of these intraday tools that traders will tend to use. All right, folks. Well, hope you found this informative and useful. Really appreciate, Scott, a lot of the comments that have been made in there. Really, really great. Folks, if you get a chance, yeah, bottom right hand corner of the screen, so easy to do. Just hit that subscribe button. Would love to have you on board for our group. You get more of this content coming up more frequently. And there is a survey in the chat. And I wanted you to go ahead and, if you fill that out, I think there's only 2 key questions, but there's a lot of, there's an area for some comments in there. I take those very seriously. So too does my manager, who happens to be here. We read through those, folks. If there's something you'd like to put in there, something you like, or whatever the case might be, love to hear it. Great to have you here. You should see Ben Watson next week, I do believe. But it's been great to be here with you guys for the last couple of weeks and to go through some of these discussions. Be sure to like today's presentation if, in fact, you did like it. Hopefully you did. That is the goal of our presentation for sure. But yeah, the survey link and have you subscribe. Well, on that note, everybody, it has been good being with you. Thanks so much for being here. Have a great rest of the day. Keep an eye on some of these trends. They are really, really fascinating with these intraday short-term indicators. Hopefully get on the right side of things. Give you some ideas for sure. On that note, take care, everybody. We'll see you next time.